Volatility index has risen considerably over the past 7 sessions, gold rising as well, but stocks have held up. So what's amiss here? Welcome to Trading Nation, everybody. I am Brian Sullivan. We're joined by Max Wolff of Manhattan Venture Partners and Dennis Davitt of Harvest Volatility Management. You know, Dennis, volatility is literally in the name of your firm. I mean, the VIX, while not at an absolute high level, has jumped about 45 or so % in the past couple of sessions. But the stock market has not gone down. One of those two things appears to be wrong. What's your take?
Well, they could both be wrong or they could both be right. What you're seeing right now are people buying options expecting an event. Most of the time when we deal with the VIX and things going on in the VIX, it tends to be a reaction to something that has happened in the stock market. The rally in gold took off on June 3rd, about a $70 rally. That was really around the unemployment number that came out and the continued easing that the people thought was going to be back in the marketplace. But volatility really goes across multiple asset classes. And one of the things that jumped out at us about 2 weeks ago was an increase in volatility in the British pound and the euro currencies. Those volatilities were at all-time highs when the VIX was sub 15. So that was the two things that really seemed disjointed to us. Either currency vol had to come in or VIX vol needed to go higher. Now, with the Brexit coming along, clearly you look at European volatility, which is even more dramatic of a rise, which can be shown in the FEZ ETF that tracks that. So gold volatility, the market not moving, volatility higher. These are all in expectations to a well-publicized event coming up. That's why we're not seeing the action in the market now.
Okay, well, Max, do you agree? I mean, are we predicting something? Because a VIX at that level should imply a certain amount of move in the S&P 500, which we have not gotten. So something seems to have to give.
Yeah, so good point. I do largely agree. I'd say this. Bonds are also telling us that stocks need to sell off. Stocks are telling us that bond needs to sell off. Volatility is telling us that we're overdue for a sell-off. Reason tells us that too. Multiples tell us that too. We're way out over our skis. And I think what happened in the volatility market is folks who want to stay long because if you don't, you lose money are probably buying a little protection, long overdue. And folks who just don't understand why things haven't moved negative in their direction, to which in some you could add me to that list, are probably continuing to double down or at least keep exposure to what they think is a correction. Markets still look like they haven't really priced Brexit, haven't really priced some of the disjointed nature of what's going on in the U.S. political arena, and haven't sort of priced what looks like a pretty decided macro slowdown in global numbers, all of which should be weighing on a market that just seems uninterested in those fundamentals.
Yeah, not the market seems, Max, let's wrap it up on this. Fair to say, not interested in a lot of things right now that it seems like it should be?
Yeah, this is a happy party, right? And the news be damned.
Well, let's not damn the news. I mean, the news media provide a valuable and important service to humanity.
Linchpin of democracy. Present company excluded.
There you go. Max Wolff and Dennis Davitt. All right, a lighthearted note to a serious discussion. Watch the VIX. Could be telling a story about what might be coming. There's a lot of things still out there. Interesting discussion. Thanks for watching Trading Nation, everybody. Brian Sullivan. We'll see you next time.